This is a follow-up video on the strategy on how to save my funded accounts. Let's jump right into it. I want to start reviewing my Edgewonk. For those who don't know what my Edgewonk is the software that I use to log my trades. And I want to start here on the day 27th of November, right? I had 5 trades and it was pretty much break even. I lost $12 per account. This is the 27th of October. Figure my trade. So here, if I click, it's a little bit messy, but because I had 5 trades, but here you can notice how I enter the first trade here, right? Stopped out here, right? My second trade was here, stopped out break even, and then I re-engaged here, stopped out here, another entry here, stopped out here. Finally, I got in short here, target here, okay? So look at this thing, 5 trades, completely over trading, right? Now, you would say is over trading, is not over trading, 5 trades is not like too much. And I try to always get my trades off of a trading idea, not a random. But I got over that stage of just taking random trades. But I want to review what was going on the internals, because I think this is one of the most important parts. If you notice, I'm just shorting, right? I am not taking any long in this choppiness here from 9:30 to 11:22 is 2 hours of trading. But if you see the internals, advanced decline collapsed, right? And tick chart is spending the majority of the time below 0. See that? And when it goes up, it goes barely to plus 480. It goes down the majority of the time, goes up, and sometime here, and then again starts to bounce off of 0 to the downside. So that is one of the positive things that I've been improving, is that my direction is not always right, but the vast majority of the times, the vast majority of the days, my direction is the market goes. Right? So I can spot two main mistakes here. Number one, I was not patient enough, right, to wait for the right, which was barely here, breaking the opening range, right? And number two, I was not risking accordingly to what the market environment was. So I can put here number one, risk too small for the volatility, and number two, I could put here realist, not having realistic. Now let's put this good location, right? These are my 2 main issues here with the trades. Now this is the third one that is not necessarily a requirement, but I'm gonna point it out because I want to improve this part too. Number 3 is not holding to my winner. All right, so not holding to the winner trade. Look how this thing collapsed. I grabbed 11 points, which is not bad, but here is 51 points. Okay, so I'm gonna be more realistic too. I don't think getting the entire run to the downside, but let's say we have until 37 right here. That's good enough. That's probably like 30 points. Yeah, 36 points. Okay, so this day taught me a lot about the volatility that it was coming into the market, number one, and the location, right? Prioritizing location. And I've seen, I want to go ahead and keep checking my days. The next day, the 30th, look at this thing. Let me review here. Okay, the 30th. All right, same thing. Market open. I started shorting here. Now, why I started shorting here? Look, this is my first entry short. Stopped out here. Second entry short. Stopped out here. Third entry short, and I grabbed some money here. This is my target. Okay, later on I took another short, and this was my target. Okay, so look at this, look at the difference on this trade. I have very good location. Market already came down, market retraced, internals were aligned, and I hit my target pretty easily, right? Risk here was very minimum, and I grabbed probably 6 points. Not much, it's kind of like a scalp, but nevertheless the location was there. Okay, whereas here I had no areas of interest, and if I had, my risk was not the proper risk. Okay, so because this trade ended up winning is not necessarily a very good trade. I want to see, let's go check on the internals, and here it is, the 30th. This is 10:02. So at 10:02 you can see how the advance is sharply coming down, but it's still positive, right? Still positive. And tick chart you can see how until 9:51 tick chart did not break to the downside. So what time is it? 10:02. Can you figure that? This one, right? But the first trade was 9:42. Look, 9:42 tick was very positive here. You can see tick was very positive. It hasn't broken to the south of the zero line. So this is why I say these are rush trades. These are trades that I'm just putting here that are not necessarily bad in a sense of location, because if you check this from here to here is 7 points. Yeah, it's a little bit soon. The location, the fundamental mistake here is that the tick chart hasn't come below zero. What is that? The majority of stocks are being bought aggressively at the ask. That's why the tick hasn't gone below zero. When the tick goes below zero is when the bid is being taken, when sellers are selling at the bid. Okay, so that is one of the principles of my trading system. I need the internals aligned. Now the advanced decline is sort of, yes, it's dropping in a very good manner, right? But the tick chart is not ready yet. Now see this, 951 goes below zero, and on the next retracement 954 I am ready to short, but I don't recall exactly this day. I'm just reviewing it now, but I figure I noticed that after this happened, and then I started to be more committed to the downside, right? Here I shorted and I grabbed my money here, right? Not the best trading day because of these two previous losers, right? But with these reviews, I'm learning on how improve my trades, right? Improve my trading and be better at waiting for the tick chart, waiting for the advanced decline, and let them talk to me. This is the second day, the 30th. Let's keep reviewing. And if you see, in this day, I was not completely accurate with the direction. I was shorting here. Yes, the market was, at the time, was going down, right? But then later after, it turned around. And I figured this. Look at this. And I've had the conclusion because yesterday happened the same thing for me. Yesterday was the November 10th. Okay, I'm recording this on Saturday, November 11th. So you see how the advanced decline went down. Let's put it here. Advanced decline went down and then started to go sideways. But look at this. It's going down on 473. It's not even negative. Look where the zero line is. Okay, so it's good that I didn't hold into my second short, because my second short was the last time to get in short. There was no more opportunity. You could argue here, but then later the market started to go up. Right? Why? The advanced decline was not strong enough, or was not negative enough for me to think, or for the market to keep going down. Okay, so that's the 30th. All right, so let's go to the next day. You have the open range here, and the next day is the 31st. I think is a very good learning experience. It was difficult for me to understand this at the time that I was doing it, but then later reviewing the trade and making this video, I realized that, oh my god, it's such a dumb trade, this one, right? So on the 31st, I have this long here and stepped out here, right? Then long here. I was smart enough here to think that my location was not good, and I just moved my stop aggressively break even, and I didn't take any other trade this day, right? So I ended up losing a little bit. But my main issue here was simply location. Now internals were aligned to go long, and if you see here, I go long here, I go long here, and the market went up. Now I'm not gonna say the proper risk, because this is too much. This is 17 points. That's not my type of trades. And if you see here, this one is 8 points. It could be, but that's not my trade. My stop shouldn't be here. My stop should have been here, and it's 12 points. Still too much risk, right, for my trading system. So main issue in this day was location, right? I want to see the internals, so I review the direction for the day, and you can see this is 934. All right, so the advanced decline came down, and then sharply after 10:05 went sharply up until 10:18. 10:05, 10:18. This is 10:05. Just following what the advanced decline is doing, right? Now look at this. Look at this thing. The market basically did not go above this, but the advanced decline went aggressively above, right? A lot higher. Now also seeing this thing positive at this was plus 1000, right? The market, even though we were basically flat, the vast majority of stocks traded in New York were up for the day. So that's number one. Number two, look at the tick chart. Tick chart barely goes below zero, even though the market is coming down here. Tick chart barely goes below zero. This is minus 200. Spends the majority of time here. Then here goes minus 448, and then This is the bounce at 10 a.m. Look at it, goes to this level, plus 800, somewhere around there. Okay, yes, plus 800, 900, and then it comes back above. So yes, my direction is long. Now my location was not the proper location. On the is interesting also to see how in these candles there are some orders coming in very aggressively, and the imbalance is actually very important in this candle. So that's a topic for another video. I want to keep reviewing in these candles. I'm referring to this candle. The order flow was aggressively going positive, right? Now that's a topic for another video. I really want to focus on just reviewing the rest of the trading. The potential best location for me to trade this was in this entry. Okay, there was the location, a consolidation here, and then a retracement and the launching point. Okay, let's keep reviewing. Let's go to the next day, which is the November 1st. I started to be more conscious about what I was doing, and this is a slow process. If you are a beginner trader and you think you can improve in a week, a matter of 2 days, yes, you could. But for me, it has been very tough to realize that there are certain patterns in the market, and the more I watch, the more I trade, and the more I take good trades, the better I become. Okay, so this day is November the 1st. I take a long here, and this is my target. Now my risk was not this thing, a lot less. It was probably like 5 points, and if you check risk and reward ratio is around like 2.5 to 1. Okay, now what I want to point out here is two things. There are very positive things about this trade. Number one, I waited for the right location, right? Number two, I was right with the direction for the day, even though this was a Fed day. I think it was a Fed day. I'm not entirely sure, but I think it was a Fed day. But yes, where is room for improvement in this trade? Obviously, the target was too conservative. I did have some room to continue in my trade, right? Let's go review the internals. You can see again, advanced decline opened up sharply down, but immediately after 941 to go up very aggressively, right? Until 10 a.m. right? At 10 a.m. let's go back to the chart. So here advanced decline is coming down. Now advanced decline is sharply going up right here until 10 a.m. So this is 10 a.m. right? And what happens is that the market started to go down, and advanced decline as well, but the market was going down more aggressively than the advanced decline. And when it comes here, we have a divergence on the advanced decline, meaning the market is sharply going down, but in the meantime advanced decline is not. It's just a shallow retracement here. Also, you can see how even though we were going down in the morning, you have the majority of the candle until, look at this, 10 a.m. above zero, right? And then when it goes down, it goes to minus 400. When it goes up, it goes to plus 800, right? So obviously you have more buyers than sellers here. And when it comes down to fill my order, look where it goes, minus 200, very shallow to the downside. If you have momentum to the downside, you would expect the tick to be at minus 900, minus 1,000, even more negative, minus 1,100. Why to the downside momentum is greater? Because when there are two things that I've learned. When the market goes down, it goes down a lot more aggressively. Hence, you will see evidence in the tick chart of panic selling or just consistent selling, right? Whereas when it goes up, it can go up a lot more slowly, and the tick chart not necessarily needs to hit minus 1,400. Oh, sorry, plus 1,400. Just need to hit plus 600, 700 consistently above zero. Okay, so and then yes, you can see here right after I got in this trade, the market has started to print in this tick readings 900, 1,000, right? So yes, good trade location in this one, but the opportunity of holding to my trades was great here. Okay, all right, let's continue. November the 2nd. Oh, this was the worst trade that I've taken in weeks. It was just a boredom trade, and I need to accept that it was a board. On this day, you can go watch my live stream. I was biased long, right? And then somehow, I do know why, I started to see some tick readings below zero, but not sustainable. Like this is, what time is this? 11:15. There you go, this one. And I took the retracement here thinking that I'll show you. I see this, and this happened to me yesterday. I didn't take the same trade. It was yesterday's trade was a lot better, and I'll show it later. But here I see how the tick chart goes below 0 to minus 600, right? But look at this, the majority of the time, like this is not a point of discussion. Look how positive is the tick and how positive is the advanced decline. See that? Sharply up and then maintain, sustain, like these ranges. And we're talking about 2 stocks out of 2,800, right? And look, this is a factor. It could be that 2,400 stocks were up and 2,000 and 400 were down. We're talking like 80-90% of stocks going up here. Okay, so this is just a bad trade. It is a trade that I do a good mental effort to not repeat again. Okay, I should have been long, and if you watch my live stream on this day, November the 2nd, you can go and check the recording. I was biased long all the time I was biased long, and we took a short here, which is no matter of momentum but direction. And this is one of the things that I've gotten a lot better, but this was an emotional trade, a boredom trade. Okay, which, by the way, I haven't taken in a long time, but I recognize that I'm not immune to take back decisions at trading. Okay, all right, let's continue on here. This is a very good day to put here. I think this is one of the days that I've been more frustrated with myself. It takes a lot of work, a lot of mental preparation for you to trade correctly, right? And I figure the more experience I get, the better I become at trading. But like I said a few seconds ago, we're not immune to being humans, right? And I think it all can be repaired, if you will, or improved with experience, right? Good and bad experience, especially bad experience. So this is November 3rd. Then I go long here again and stepped out break even. I took 1, 2, 3, 4, 5 trades, right? Before I check here, before we comment about these trades, let's go to the internals, right? What we see, advanced decline opening at 1900. Number one, very bullish. We are gapping up this day. We're gapping up big time, right? Look at this gap right here from 43.33 to 43.60. Okay, so 30 points up is almost 1% of gap. So out of the gate, you see how advanced decline sharply move up after the open, boom, right? And then starts to retrace a little bit. Now, what happens when the advanced decline is so positive? Like, it doesn't matter if it goes down a little bit, because you have a universe of 2,800 stocks moving from a positive to negative, right? But the vast majority are positive. The vast majority are positive. Now, a different scenario is if this thing goes down so sharp, like, and collapses from 2,000 to plus 500 in matter of 10-15 minutes, then you can assess, yeah, the market is just selling off after gapping up. It's just a retracement to continue to go down. But that is not the case. Look, the retracement from 2160 to 1900. Basically, still you have the majority of stocks. It could be 2,500 stocks going up, 2,400 stocks going up and 400 going down. That's a net of plus 2,000. That's how imbalanced is to the positive side, right? So that's number one. Number two, you can see how tick opened very positive and then starts slowly to go down, because this is normal, right? It's not sustainable. It's the plus 1,500 is not sustainable. So it starts to go down. Like I say, to go up, it doesn't need to be at plus 1,000. It can be just barely positive and stocks will go up. Now, look how much time did it spend below zero? Certainly nothing, right? If you compare this, let's say you don't see this. Let's say you haven't seen this, right? You're seeing this right now. And this is an exercise that I recommended on my previous video. Just do this exercise. Look at the tick and try to, with the tick's information, try to assess what is the direction of the market. That's very useful. I've done it. I practice it. I still do it all the time with random days. I look at the tick and then I go to the chart to see, all right, yeah, the market should be going up, right? And when it's not accurate, then I'll see what happened. Okay, we get to supply, we get to demand, etc. But here you can see how the market is just overwhelmingly positive here. Now, yes, it has its dips because this is a cyclical indicator. It should go down at some point during the day because momentum is lost to either direction. And if we go sideways, you should have positive and negative readings, right? So here you have a shallow negative read, minus 531. And look at the market. the overwhelm, move to the downside. But where to? Where to? The worst part about this day is that if you, and you can go check my live stream, it's November 3rd. I did have this location. 62 was there since the beginning of the day. Since we have the open range here formation, I put this location as a potential long area. Now, 2 mistakes here. Easy. 2 mistakes. Number 1, the common mistake for me, location number 1 is, and second, if it's not location, I could say that I could have risked this pivot. For instance, here is 8 points, then I got in here to here will be 7 points. This one is discarded as well, 10 points, right? So yes, number 1 on my list of mistakes is location. Number 2 is my risk. It was too shallow, and the market, you can see how the market started to go up from here. Now, the frustrating part was since I was not trusting my location, and this is the right decision. This is a right decision. I moved my stop break even because I didn't trust my location. I was not willing, and for the right reason, I was not willing to risk 10 points in this trade, right? Why? Because my invalidation point is not this one, it's not this one. My invalidation point is, this is my invalidation point right here. Right? I get frustrated because I get in here. I went, it was a little bit down and then started to go up, but this was a very volatile candle. And after they stopped me out break even, look what it did. Okay. So I don't think it's completely wasted. This trade, it taught me a lot about where to get in, right? And obviously the right point for me to get in was in this one. Hold on to my trade, up, down, doesn't matter, keeping my risk. After I am 3, 4, whatever is my plan says, then yes, I could move my stop break even and hold into my trade. If you see the internals, there is no real reason why you should move your stop or reduce your risk if you have the right location. That's what I'm referring to. Okay. All right. So let's continue on. This is the next day, November 6th. Again. Okay. Common denominator here is location. Now, you can notice how in this trade, I was completely biased to the short side. Again, you can go check my live streams. Everything is recorded live in real time. This is not necessarily a bad decision of moving my stop break even. Now, what is the mistake? You can see how, and I can't recall if I had this location. Right? I might, but this is the opening range, right? So from 82 to 89 is 7 points. If I go to the volume bar, I'm 95% sure that I could have reduced my location to this, right? And then getting at this spike. Okay, the risk is 5 points, very, very small. Skip my trade, and then the market ended up going down. Okay, let's review the internals. Market open, advanced decline. It's not matter of a 300 drop or 400 or an oscillation of plus to minus 200. Look at this. This is from plus 200, call it, right, to minus 1200. So that's aggressive. That's very aggressive, right? And then you can see also how the tick chart is spending always time, only the time below 0. And then when it goes up, it is 400, right? No momentum to the upside, right? And then again, down the majority of the time. What time is this? 10:35. There you go. 10:35. The first spike is in this one, right? And then you have a better entry, but the tick chart is barely at 360. Wow, this is a textbook entry. Now, I was short here, break even here, and then, or I was just not thinking clearly on taking this trade, right? Now, from November the 6th, I've improved a little bit, right? You can see now. Let's review the 7th, right? On the 7th, take out this one. On the 7th, I started to wave more for my location. I was like, okay, what are you doing? Your common mistake is just trade location. You need to take trade location. Okay, so there it goes. This day is not as clear on the internals, but I'll point out what happened here. Okay, so this is my entry and this is my target. Again, target was very close. With this type of momentum, I could have held my trade a little bit longer, right? And even if I didn't move my stop loss to profit, but to break even, yeah, I could have profited a little bit more either, but it's not realistic. Let's say from here, I could have gotten this, right? 17, 18 points. Now, what happened this day? Let's go to the internals, right? The market is not gapping up. The market is just opening flat, but advanced decline line goes negative, right? Advanced decline goes negative, and after the dip, started to go very sharply to the upside. Look at this. It goes from minus 1000 to minus 370, right? And then when it goes down very shallowly. You see this? This is the opening, and you can see how, right, from here to here, you see how the divergence on the advanced decline, this is the opening range, and this is the first retracement. Look at the advanced decline. You have a divergence here. Okay. Now on the tick chart, it is negative until we break to the upside here at 10, right? When we break at 1001 is when I decide, all right, this thing might go higher. So 1001 is right here. This is 1001, and I say, all right, advanced decline is going up, right? Diverging, right? Giving us a positive divergence, and tick chart is finally printing positive numbers, right? Now you see that? There you go. So this is on November the 8th. I figure I did have a good entry since I was a little bit soon. I had a better entry, but it could have been a, how can I say this, like a more trustworthy trade. We gapped up a little bit, not much. We started to go up, but the advanced decline was clearly not going. It was going up from here, from 36 to from minus 300 to minus plus 500, and then we started to go down sharply, and we go back to zero line at 10:06 is right there. Is here is 10 a.m. right? Why I do say this was a too of an early trade, right? And the right entry was this one, right? And I'm not saying my entry was 2 points before, right? But the correct entry was this one. Even though it's a winning trade, I realize that is not a perfect trade. Okay, so I got in here and target. It was a winner, but the best entry was this one, right? And it was a lot more difficult trade to hold, right? Because look at this choppiness slowly grinding down, and then afterwards it collapsed, right? Now, why I do say my entry was not very good, because you see here how the picture is just up, and finally we broke down at 9:56, right? What time is this? 9:50. I got in at 10, but 9:56. Yeah, I started to flip my bias to the downside. Okay, I started to flip my bias to the downside. Advanced decline is actually going down as well, but the tick's still positive. 9:56 still it starts to go down. But look what happens here at 10:04 and the retracement, right? Finally, the tick hits minus 600. These at 10:09. What time is this? 10:14. Right. You have enough time to see this retracement, right, to plus 300 and assess and say tick is weak. Tick is weak. Advanced decline now at 10 is not very strong. It's just barely at 0. And this is the right entry, and holding this trade longer. Now, why I took this trade? Because this is a tradable reaction. This is a trade that is fast. Gap close, done. But if I see this retracement, right, the smart thing to do for me was not only taking this trade, but instead of taking this trade, taking this one, right? And holding this thing to the downside. November 9th. This was a very good trading day for me, not only in terms of profits, but the decision making was impeccable, right? I felt very good after this trading day because I made the right decision. Again, I entered a short here and I had this one, right? And I said, look at the internals. I'm assessing the internals, right? We're going down from 1200 to 88. And what time is this? 10:07. 10:07. No, 10:07 is right after. But after we start here going down, what time is this? 9:47. So 9:47, I'm already short bias. 9:47 is right here. Okay, right? I know my problem is location, and I start finding locations. Right. I need to find the right location for me to trade this. I know advanced decline is going down. I want to see tick chart as well. And this is 9:48. 9:48. Finally, we broke to the downside. See that? Here. We gapped up a little bit. So that's why the tick chart is up, because we gapped up a little bit. Now we start sharply going down, right? And when we bounce back up, yes, we did go above 0. That's 952. 952 is right here. But you can see this tick reversal. This is 959, right? So on this tick reversal, I said, sorry, my decision was here. Or was it this one? 956 right here. I check the advanced decline, the tick chart, and instead of continue going down, it bounced, right? So I said, no, this thing might go higher. I want to wait for a better location. So I ended up closing this trade early, right, for a break even right here, and re-engaged a couple minutes after, right, 4 or 5 minutes after. My risk was the entire area. I think my risk was something like this, right, for a 2.5 to 1, somewhere around there. Now, I think this was a safer trade than the previous day, although the best entry was again at this level. Now, what happens later, right? What happens later? I got this trade, good, advanced decline. You can see how advanced decline continued going down. Actually was hovering 0 and the market was flat. Now, here's 1 in the afternoon. Yeah, 1:10 in the afternoon. The sharp drop came, but you can see on the tick chart, right? Now you can see that the majority of the trades are happening below 0. Right? The majority of the trades are happening below 0. Very little trading above, And when you have this plus 600, this is 1204. 1204 is right here. You are hitting some sort of like a climax here in this day. Okay, so this was the best entry because this is where the market actually ended up dropping, right? But still, I do think reading the internals real time is some of a challenge, but I've gotten a lot better. You see how I didn't try any long this day. I was always trying the short trades. Okay, all right, so let's review yesterday's trading. I was long bias in the morning because of the dollar, right? Then I flipped my bias because of the advanced decline. I cannot say it was a bad read. I didn't have follow through, right? I did not have follow through, but I don't think I read the market wrong. Now, I did find some room for improvement. You can see here the majority of the trading is happening above 0 until 9:51. Then later we start to have more like negative reads, right? Here's where I got fooled, like minus 853 and bouncing above 0, and this is where I got in short 948. Not really, I got short here 1101. Okay, and now even though the market is spending good chunk of its time below 0 here on the tick, we have momentum to the upside, right? Here the advanced decline was not bad either, but it was not below 0. Now at 9 a.m. look where it is having somewhat a short trend, right? And I think it was coherent. The only thing was because we were gapping up, this thing was not going below 0, right? So the majority of the stocks were not negative for the day. Momentum shifted to the upside and I got stepped out, right? It was a bad location. It was not. Like, location was good, right? I think if tomorrow this trading opportunity presents itself, I probably will take it again. Now, what happens right after is that momentum start to pick up to the upside. You have a very positive tick read and then start to balance more, right? And the market continue going up. Now, is this something that I could improve? I mean, this trade was not bad per se. The bad part of yesterday that I lost some money is that I did not engage right after my losing trade on a long, right? There are not many opportunities to go long. It should have been this one. And if we speak realistically, this is especially this one, is the trades that I'm trying to avoid, okay? These are the trades that I'm trying to avoid. I would have expected a retracement to probably this level, and that would have been a lot different for me. But it's for my trading system and trading psychology, it's not easy to catch this move off of this retracement, right? And then the market just didn't retrace at all on the rest of the day. The main takeaways of this is, number one, location is a priority for me, and number two is my risk. Okay, if I have a good location, I could have a good risk. So my trades are asymmetric. I could get a better risk and reward. I think overall I'm getting a better slowly, but doing this type of work has helped me tremendously, recognizing when I make a good or a bad decision. The boredom trade is something that showed up after a month of not taking any boredom trade. And yeah, location. I encourage you to make these type of reviews in your trades. And let's say you take crappy trades, do this. Look where the market changed and where the opportunities based on your trading psychology or trading mentality, where you could have had a good opportunity. For instance, if I am a blank page, I don't trade like I trade right now, but I have this, and then this is the retracement, and then it starts to go up. I would say, oh no, this is the entry, right? What happened here? Let's go to the internals. Oh, the internals were breaking to the upside. Now here 1111, it started to get to the zero. No, I don't know, or get to your indicator, but try to find commonalities in this point. Try to find some signals that would give you a probability for you to win a trade, right? So that's how you improve. That's how I have improved big time. I feel very good assessing the direction for the day. I not only use the internals, I use the dollar and rates, but that's pre-market. So after the market is open, I rely heavily on the internals, even if I have a bias of pre-market, right? I still watch the rates. I want to follow them when they are, you know, behaving erratic or just a very important move in the dollar. But that's how one can improve. Okay, so I hope you like this video, and if you really like it, please give it a thumbs up and share it to other people so we can grow the channel. Have a nice day. Bye bye.